Despite the headlines about trade wars and tariffs, China remains America's third largest export market, importing over $165 billion in American goods last year. That's enough to support nearly 1 million American jobs. But what exactly is China buying from us, and how are escalating tariffs reshaping this critical economic relationship? The story of U.S.-China trade is one of surprising interdependence, political tension, and economic necessity. Today, we're diving into the real numbers behind what China imports from America, how these trade patterns have evolved, and what it means for both economies. When Americans think about trade with China, we often picture container ships arriving at our ports filled with electronics, furniture, and clothing. But the reverse flow, what we send to China, tells an equally important story about America's economic strengths and China's growing needs. Let's start with energy, which has emerged as the leading category of American exports to China. In 2023, China imported over $22 billion worth of mineral fuels, oils, and related products from the United States. This represents a dramatic shift from just a few years ago when China bought relatively little American energy. What's fascinating is how geographically concentrated this trade is. Texas and Louisiana together account for 96% of all U.S. oil and gas exports to China, a vivid example of how international trade creates regional economic winners. But energy isn't the only commodity China craves from America's heartland. Agricultural products form another massive export category. In 2023, China imported over $16 billion worth of oilseeds, grains, and fruits from the U.S. Soybeans dominate this category, serving as a critical protein source for China's enormous livestock industry, particularly its pork production. The agricultural trade highlights both the complementary nature of the two economies and the vulnerability of American farmers to trade tensions. When China imposed retaliatory tariffs in 2018, American soybean exports plummeted by a staggering 75%, leaving farmers scrambling to find alternative markets. Following the Phase 1 trade agreement in 2020, exports rebounded dramatically, creating a V-shaped recovery that demonstrates just how quickly policy decisions can reshape trade flows. Beyond these primary commodities, China imports significant quantities of sophisticated American manufacturing equipment and technology. In 2023, machinery, nuclear reactors, and boilers accounted for over $20 billion in Chinese imports from the U.S. These aren't consumer products, but rather industrial machinery that helps power China's vast manufacturing sector. American-made equipment for manufacturing, construction, and mining operations contributes to Chinese industrial efficiency and productivity. The high-tech sector represents another crucial dimension of this trade relationship. Electrical and electronic equipment, including computers, semiconductors, and telecommunications equipment, made up $14 billion in Chinese imports from the U.S. in 2023. Semiconductors have been particularly significant, with U.S.-made chips supporting China's massive electronics manufacturing industry. However, this sector has experienced substantial disruption in recent years. Between 2021 and 2023, Chinese imports of American semiconductors plunged by 52%, from a peak of $14.2 billion to just $6.8 billion, the lowest level since 2016. This collapse reflects both China's economic slowdown and aggressive U.S. export controls on advanced chips imposed starting in October 2022. As American technology becomes less available, Chinese buyers have increasingly turned to domestic or other foreign semiconductor suppliers. The aerospace industry offers another example of how politics and commerce intersect in this relationship. American aircraft and aerospace components have traditionally been major exports to China, with Boeing serving as a key supplier to China's rapidly expanding aviation industry. This trade hit turbulence during the Boeing 737 MAX crisis, when Chinese regulators grounded the aircraft and new orders virtually ceased. By 2023, aerospace exports had rebounded to $6.8 billion, making it the fifth largest U.S. export sector to China, but still below previous peaks as Chinese airlines increasingly turned to European Airbus alternatives. One of the most remarkable growth stories in U.S.-China trade has been pharmaceuticals. Chinese imports of American pharmaceutical products reached $6.58 billion in 2023, but that figure understates the sector's trajectory. From just $3.4 billion in 2017, pharma exports surged to nearly $11 billion by 2022, a tripling in just 5 years. Much of this growth has been driven by high-value drugs like cancer therapies, vaccines, and biologics that China cannot produce domestically at scale. Even during the height of trade tensions, China often exempted critical medicines from tariffs, recognizing their importance to public health. The automobile sector presents yet another dimension of this complex relationship. In 2023, China imported $10.55 billion worth of vehicles and automotive components from the United States. These aren't ordinary cars, but primarily luxury SUVs and electric vehicles, along with specialized components. However, this category has been highly sensitive to tariff policies. When China hiked tariffs on American autos to 40% in 2018, imports dropped sharply. As tariffs were later adjusted, trade partially recovered, highlighting the direct impact of trade policy on consumer choices and industry performance. The story of U.S.-China trade isn't just about what's bought and sold. It's about the broader economic interplay between the world's two largest economies. Despite recurring tensions, the trade linkage remains robust, with U.S. exports to China supporting nearly 1 million American jobs in 2022. Many of these jobs are in agriculture, but others span high-tech manufacturing, energy production, and pharmaceutical research. Recent developments have added new challenges to this relationship. The United States has raised tariffs on Chinese goods to 145%, while China has responded with 125% tariffs on U.S. imports. These escalating barriers make it substantially more costly for Chinese companies to purchase American products, threatening to disrupt established supply chains and commercial relationships. Looking ahead, the future of U.S.-China trade will likely be shaped by both economic necessities and geopolitical considerations. Despite tensions, the economic interdependence between the two nations creates powerful incentives to maintain commercial ties. American technological innovation, agricultural productivity, and energy resources continue to meet specific Chinese economic needs. However, concerns about supply chain security, technology transfer, and strategic competition may lead to continued efforts at selective decoupling in certain sectors, particularly in advanced technologies with potential military applications. What do you think the future holds for U.S.-China trade relations? Will economic pragmatism prevail over geopolitical rivalry? Or are we heading toward a more divided global economy? Leave your thoughts in the comments. The story of what China buys from America reveals much more than just trade statistics. It shows how deeply interconnected our economies remain, despite political differences. From Texas oil fields to Midwestern farms, from Silicon Valley tech firms to pharmaceutical labs, American producers rely on Chinese markets just as Chinese industries depend on American innovation. Understanding this relationship gives us crucial insight into not just trade policy, but the future of the global economy itself.